Welcome to Illuminati Silver. We tell you the truth about silver. Today is Friday the 26th of February 2021 and we're looking at both gold and silver prices collapsing, perhaps too strong a word, but falling significantly today when so many so-called experts were predicting their rise. So let's take a look. Okay, yesterday we produced a video entitled US Digital Dollar Currency, a Real Short-Term Possibility? Where we highlighted the FED Chair Jerome Powell had given testimony to Congress, broadly reaffirming the Fed's stance on accommodative monetary policy for some time to come. He also stated that the bank planned to spend this year doing extensive research and public outreach about the idea of a digital dollar, describing it as a high priority project. And we've placed a link to that video below. Now tomorrow, as usual, we shall be publishing our gold and silver weekly update, so please do not miss that. But the news today is the rather significant fall in gold and silver prices, when so many of the pumpers have produced a plethora of videos stating that we should all be expecting silver to really take off today. Well, at the time of writing this, which is 1837 GMT, gold is currently $1,727, down $48 on the day, and silver is $26.41, down $1.09 on the day. Of course, these prices may change by the time this video is published. So what's happened? Well, of note is the breakdown below 1750 for gold, a key support level. But it does look like our outlier base of $1,700 is going to hold, at least for now. Analysts are currently calculating that what has caused this shift in sentiment is a rise in the dollar index today by 0.69 up to now, but it has been a little higher, to 90.82. So too is a shift towards bond buying, as the 10-year bond yield spiked to 1.66% earlier today. Some analysts are stating that if gold falls below $1,700, then $1,500 could not be totally ruled out. Silver, having earlier in the week struggled to reach and then hold above $28 in the last few hours, fell sharply, actually falling as low at one point to $26.16. Some people perhaps were even thinking it might have fallen below $26. Now we shall cover support and resistance levels on both gold and silver tomorrow, but generally $24 level silver support is again being muted. Very interesting. The very people who were saying to expect it to rise above $30, and these are genuine experts, not pumpers, are now saying, oh my God, look, 24 is possible. Now, Bloomberg reported the following just a couple of hours ago. Quote, gold extended declines heading for its worst month since late 2016 as the dollar advanced and treasury yields paired losses. Gold has fallen more than 8% this year as traders focus on an economic recovery from the COVID-19 pandemic and higher treasury yields, which make gold less competitive because it doesn't offer interest. That has caused holdings in bullion-backed exchange-traded funds to fall to its lowest level in 7 months. The US dollar is heading for a second week of gains, further diminishing demand for gold as an alternative asset. Gold is having a rough 2021, and the only thing that can right the ship is if central banks thwart the trajectory of bond yields, said Edward Moyer, a senior market analyst at Oanda Corp. The Fed will have plenty of opportunities to stem surging treasury yields, but for now, it seems they can be a little more patient. Federal Reserve Chairman Jerome Powell this week assured investors that the central bank is in no rush to pull back stimulus, boosting demand for many raw materials while further reducing the appeal of bullion as a haven asset. Bullion declined further on Friday as traders exited positions with US equities trading mixed and global bond rout easing. Gold got hit aggressively just after the cash equities opened today, said Tai Wong, head of metals derivatives trading at BMO Capital Markets, noting that investors bullish on bullion sold their holdings after the metal failed to maintain the key levels of $1,760 to $1,765 an ounce in overnight trading. Natixis's Bernard Dada said he wouldn't expect the same collapse in gold seen in 2011, but clearly there will be some pressure on prices as economies in the West open up. He sees gold around 1,700 in the longer term, given the abundance of liquidity in financial markets. Bullion may also face downward pressure from stock market sell-offs as some investors look for cash to cover margin calls, he said. Spot gold dropped 2.6% to $1,725 an ounce at 11:39 a.m. in New York after slumping 1.9% on Thursday. It's down more than 6.6% this month, on pace for its biggest drop since November 2016. Silver, platinum and palladium declined more than 3% on Friday, while the Bloomberg Dollar Index spot index rose 0.5%. End of that article, or the excerpt from that article. Now, Reuters have reported similarly, of course, slightly different take, marginally different prices, but we'll go into that as well because it's quite interesting to see their view. Quote, gold fell over 2% to an 8-month low on Friday, en route for its worst month since November 16, as a stronger dollar and elevated US Treasury yields hammered non-yielding bullion's appeal. US gold futures dropped 2.5% to $1,731. Gold is struggling due to what's going on in the bond market, said Bob Harbercorn, senior market strategist at RJO. Futures adding gold prices at these levels look like a great buy, he said. US 10-year Treasury yields held near their highest in over a year, while the dollar index also jumped. Rising inflation expectations have lifted US Treasury yields more than 70 basis points so far this year, eroding gold status as an inflation hedge, since that translates into a relatively higher opportunity cost of holding the metal. Gold is in trouble once more, and the near-term outlook isn't looking great for the yellow metal, Oando analyst Craig Earlham said in a note. Rising yields and now a jump in the dollar are piling the pressure on gold and barring a reversal in bond markets. It's tough to envisage its fortunes improving. Meanwhile, data showed US consumer spending increased by the most in 7 months in January. Side note, we shall be covering this in detail tomorrow. But while these economic numbers do take away some safe haven buying, the trillions in stimulus that have been printed have to get into the system and interest rates are expected to stay low, which should help gold and silver down the road, Harbercorn said. Silver fell 3.1% to $26.56 an ounce and was poised for its first monthly decline in 3, down 1.9% so far. Palladium declined 2.4% at $2,343, while platinum fell 2% to $1,191. However, both the autocatalyst metals were on track for a monthly gain. Unquote. End of Reuters article. So, once again, we'll cover most of this tomorrow. But cynically, our greatest indicator as to a guaranteed fall in gold and silver prices can be gauged when all the YouTube sheeple advocate that the end of COMEX expiry and the culminating in the silver squeeze was going to push silver through the roof. That's more than enough for us to expect a fall, no doubt. That said, in fairness, silver's fall has been relatively modest. And listeners know that we are certainly more bullish silver than we are gold short term, simply because as the economy starts to pick up, the monetary value of both gold and silver will fall, but the industrial demand component of silver will inevitably rise, providing there is a pickup in both the US and the global economy. That's it for now. What do you think? Do you believe it's been market manipulation trying to ram the price down deliberately? Or do you think it is just simply people saying, we've made enough money here, we'd rather put our investments into something perhaps a little more attractive short term? Though we'll be the first to admit, even at 1.66%, we ourselves cannot get too excited. Do share your thoughts. Thank you for listening. And if you haven't done so, please subscribe to our channel. We hope you have found this video interesting and informative. And if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.